market just really started to change.
There's always a contract involved, right? Somebody's assuming the rights to that contract to step in and purchase the home. And I think that's important to understand because the cash guarantee and the model that it's created has been this security blanket.
All right, Joe. Well, good afternoon.
Hey, Mike.
Boy, it's
We're
been a
back.
while since we did our podcast. So we'd like to welcome everybody back. We're excited.
Special edition. Do you remember what the podcast is called?
The market update with Mike and Joe.
All right. It wasn't the mortgage update with Mike
Or
and Joe?
maybe it was the mortgage update with Mike
One
and
of the
Joe.
two.
One of the two.
We're close.
I think they both sound good. So I think before we jump in, just real quick as an aside, just so there's something for the record, what is your prediction, Joe, for the Bills this next year? What's going to be their record?
Man, it's early for that, Mike.
I know.
We're in
Listen,
World Cup.
listen,
we're
we
in
might
World
not do
Cup
this
territory
again
right now.
for a while. So
All right, I guess, I think it's 12-5.
I'm going 11-6. They win the division.
It's Super Bowl year. I say it
And
every
it's
time.
got to be.
Super Bowl
It's
year, right?
This has
Gotta
got to
go.
be the
We
year.
gotta go.
They're stacked. They did well in the offseason. But
Right. Maybe we can, we had the Sabres in the playoffs. Maybe we can get a
Exactly.
U.S. World Cup victory and a Bills Super Bowl.
wow,
all
the
in
celebration
Yeah,
abounds. So jump in. Obviously, as we said, Joe, this is a special edition of our podcast, the Mortgage Update with Mike and Joe. We're super excited to introduce a new program that we're going to roll out. It obviously dovetails with a lot of other programs that we've rolled out. And I think just to kind of level set kind of where we're at is, Joe, as you remember, really about starting maybe 4 or 5 years ago, the market just really started to change quite a bit, where it became a seller's market at that time. Can you kind of just share with everyone kind of what happened and as we begin to talk about this new program, what was going on within the marketplace that caused all this?
Yeah, so I mean, we've been in a inventory and demand, lack of inventory, high demand, right? Supply and demand issue that we've seen in this market. It continues where multiple buyers bidding on homes. The competition is high, right? And so when a listing agent or a seller is considering the offers that have come in on their home, they're looking for the strength behind those offers. One, is it from a local lender, right? We check that box, right? Genesee Regional Bank, we're right here in Rochester, Syracuse, and we're doing a little bit in Buffalo, but Western New York is our home, right? Western and Central New York. And so, we check that box of being local. So that's step one. Step two is what's that strength, right? We have multiple levels that somebody could come in with an offer at, right? You start with your normal pre-qualification letter, right? That's a loan officer. Maybe you're providing them with your pay stub and a bank statement. They're verifying that stuff, making sure that you qualify, and then they're issuing you a pre-qualification letter. It's strong, right? But depending on the loan officer, how much time they have to spend on the transaction, et cetera, sometimes we can see those can be a little softer, or that pre-qualification letter could have come from another bank. Right, and now we're getting it secondhand. So,
Correct.
That pre-qual is probably the lowest on the list there. Then you have a pre-approval, standard pre-approval, fully underwritten. Our programs, conventional pre-approval requires a minimum of 3% earnest money deposit, right? So that's, the earnest money deposit can also help strengthen the offer, right? A little bit more skin in the game results in a little bit stronger offer for the buyer or for the seller. And so, our standard conventional pre-approval, fully underwritten, the buyer can put a 3% earnest money deposit. They could put more if they want. In some instances, they have the funds and they could guarantee the appraisal. Now they have mortgage commitment in hand, they're guaranteeing an appraisal. Again, a way to level up that offer, strengthen it a little bit more. Then in 2022, we rolled out our Cash+ program. What that is it's fully underwritten. So we are putting that through the paces, right? And I think when we think about fully underwritten, what does that mean? It means that an underwriter's reviewing your income. They're reviewing the assets on the file. They're reviewing the credit. We're checking for hidden foreclosures maybe that aren't showing up on the credit report but are on your what they call a fraud report. Other properties you may own. We're really putting that thing through the paces to make sure there's nothing we're not going to uncover in that review that we would uncover after the fact, right? And that Cash+ program, we suggest a 10% earnest money deposit, again, to bolster that requirement that offer to make it a little bit stronger.
Right.
Since we rolled that program out in 2022, we've done over 1,500 of those transactions. The offers get accepted, the deals close, right? And a lot of times, there's always that question people ask: what happens if the borrower loses their job? What happens if they don't want the house anymore, right? And so, the market has kind of responded in that way, into which we rolled out another level of that, which was called the Cash+ guarantee.
Okay.
And that program basically added another level of strength. It said, hey, if something happens to the buyer and they can no longer qualify for the mortgage, or they decide they no longer want the home, the bank would step in and purchase the home on behalf of the buyer from the seller. And that really has become, in the minds of sellers, listing agents, realtors, right? That's become stronger than cash. Because with cash, a buyer could simply just forfeit their earnest money deposit and say, I don't want the house anymore, I'm done.
So Joe, when you think about the cash guarantee program that we had, can you kind of speak to, the number of cash guarantees that we issued, that we closed on, and how often did we actually have to step in and buy the house?
Yeah, so what's interesting with the cash guarantee, right? You'd think, hey, well, that's a great product, right? But, like many of our competitors, that program requires a 20% earnest money deposit. So not everybody has that or is willing to put up that 20% earnest money deposit, even with the security that the loan's been fully underwritten, which not all lenders do, but
Right.
That was one of our things. Putting up that 20% on a $500,000 house is $100,000. Right? So you're putting $100,000 of your money at risk. If it wasn't fully underwritten, you're running that risk of, did they miss something? Right? It's questionable in your mind. And so, with that program, we issued, or we've done 257 cash guarantees, right? We've done 1,500 cash plus, 257 cash guarantees. That cash guarantee, we've never had to step in and buy a house, right? And I think that's important to understand because the cash guarantee and the model that it's created has been this security blanket, right? Of, well, if something happens, the deal's still going to close.
Right.
And, it's helped to get buyers, their offers accepted. It's helped to give sellers the comfort when they're accepting those offers that the deal's going to close. And that's the biggest thing we've gone through this evolution of our programs is how do we provide the buyer with a position to offer on a home that not only gives them the security and confidence that their deal's going to close, but it also gives the seller and the agents and all parties involved that security that the deal will close.
Right. And I think, Joe, one of the things that we want to talk about and reinforce is, one of the things that you talked about, was underwriting the loan and things that we need to catch, which include not just verifying someone's income, confirming their income, their assets, their credit, but some of the things that you talked about that really can only come up when an underwriter is really reviewing that file, such as, someone forgets to disclose that there's a property that they own that isn't reflected on the application. Can you kind of speak to why that's so important to address that up front?
Yeah, I mean, when you find those things up front, you're accounting for what those liabilities are that the borrower has. If you don't run that report and you don't see that extra property, now all of a sudden you could have, unfortunately New York State's a very high tax state, right? So you could have $1,000 a month in taxes and now all of a sudden you no longer qualify for your mortgage, right? Because you have that extra liability that wasn't accounted for initially. And these are things that, on a standard pre-qualification, they happen, right? And it's the ability to navigate through restructuring the loan and taking the additional time, or in a worst case scenario, I'm sorry, we can't give you the money. Right. And so by underwriting those loans up front, you're uncovering all that, you're getting rid of all those surprises, and that eliminates the unsecurity for the borrower, right? Of, hey, is something going to happen where I'm not going to qualify? Because again, we eat, sleep, and breathe mortgage. We know these things as they come up. We can navigate through them. We can deal them. A buyer may not know the importance of saying, oh yeah, I forgot I'm on the title to the house with my mom, just in case something happens to them.
I think that's an important point. I mean, as a local community bank, GRB, obviously this year we're celebrating our 30th year. We're 1.3, approaching a $1.4 billion bank. We are vested and interested in ensuring that the buyer has a great experience. To your point, they're making a very large deposit on this home. They need to know that we fully vetted their application out so there's no surprises on the back end. Can you kind of speak to that? If those steps are skipped and someone is getting, another letter from another company, what are some of the risks that could be inherent within that transaction?
Yeah, again, it's the unknown, right? It's the uncertainty that, did we cross all the T's and dot all the I's? And I think even too, we see this a lot with income, right? Variable income has become very rampant in
Seems like everybody's got a side hustle.
either a side hustle or they're not working the full 40 hours a week, or their hours vary, right? And so that adds a layer that if you're not taking that extra time to validate, does my year-to-date earnings support 40 hours a week, you could get caught in a little trap there, and all of a sudden your loan no longer qualifies.
Right.
You know, the other part that we're doing with the Cash Plus is we're doing our homework, right? In addition to the fully underwritten, when that buyer's writing an offer, we're taking the time to understand, where's this house going to appraise, right? We're consulting with our appraisal firm to get a little, what's called an oral appraisal, right? Hey, you know, we got a buyer that's writing on this house that's listed for $250. They want to write at $300. You know, what are our comps telling us? Do we think this is going to appraise? Because that allows us to prepare the buyer, right? If for some reason that's not going to appraise at that level, we could still make the deal work.
Right.
But it's better to have that conversation up front so that everybody's prepared and understands what that means to them. Because appraisal gaps have become a concern as well, right? Is my appraisal gap going to be covered? The cash guarantee, as it was set up before, and as how a lot of our other lenders do it, require the borrower to say, I'm going to guarantee this appraisal. Meaning, that doesn't mean that the lender's coming in and making up the difference if the house doesn't appraise. The borrower is, whether they're shifting their down payment around, and instead of doing 80% loan to value, they're actually doing a 90% loan to value, and the rest is going towards that appraisal gap, right? So the buyer is paying for it. The lenders don't pay for that, but it's a conversation to have up front to prepare the client to say, hey, you're writing on this house, there's a chance it could appraise $10,000 less than what you're going up to from an offer perspective. So you can either make up that $10,000 right out of pocket. You could borrow we could shift your borrowing. Maybe you're going to pay PMI in order to cover that gap, right? There's different ways to cover those gaps, but ultimately it lands on the buyer, and it's how their loan is structured that gets that gap covered. And I think that's a common misconception that we hear a lot today as well, is that, you know, the XYZ company, they're just going to cover the gap. It's not how it works.
Right. So Joe, so here we are. So we're excited, you know, to roll out.
So before we, I'll let me pause you there, Mike,
Sure,
because
sure.
I actually have an interesting stat I wanted to share with you.
Okay,
So,
you go right ahead.
You know, I'm a nerd, and I like to
You
nerd
do
out on
nerd
data
out,
sometimes,
yes.
right?
I like
So I was looking at the HMDA data. Well, I was using AI to help me look at the HMDA data.
Okay.
And one of the things that I uncovered, you mentioned GRB being a local community bank. We are the #1 community bank when it comes to purchase money mortgages in New York State. So, you know, I think a lot of times people think a bank's mortgage may not be the most important area of their business, et cetera. From our perspective, as I said before, we eat, sleep, breathe mortgage. That's equated to us becoming that #1 community bank. And community bank is defined as any bank less than $10 billion in assets. And so, you know, as a community bank, we are the #1 purchase money mortgage.
That's exciting.
Yeah.
You know, I did not know that. I knew we were up there, but I did not know.
It was
that
always
we were-
anecdotal, and that's why I had to
that's
validate
awesome.
it with the data.
That's great. That's great. That's great.
So, you know, just an interesting stat to share. But in 2023, like I said, we rolled out our cash guarantee program, and that program was successful. We did the 257 that we did, but recently, because of the level of competition and other banks trying to roll out similar type products, it's come under the light of the regulators. They're doing their due diligence on that to understand, you know, as a bank, you know, is it allowable for us to purchase a home as part of this cash guarantee type of product? So instead of waiting for the regulators to come back to us and telling us if it's allowable, we paused our program, but we've also shifted it, and we've made it stronger. And so again, part of our goal is to ensure to all parties that the transaction is going to close, right? And so we're still following that same path. This new program is called Cash+Secured. Okay.
So why'd you choose that name?
I'm going to get to that.
Okay.
So when you think of the way this program works, we're still fully underwriting that borrower up front.
Okay.
When we fully underwrite that borrower and approve them, we're actually giving them, this confident in our underwriting, we are giving the borrower a line of credit. It's a restricted residential real estate acquisition line of credit. That's a mouthful, right? What does that mean? It means that basically the line of credit is solely for the purpose of purchasing the home that they're writing on.
Okay.
Now, what that does, think of that as a security instrument, right? Security instrument for the buyer and for the seller, that transaction is going to close because we have this line of credit in place. So when that buyer gets approved, we're going to issue them a letter. It's a proof of funds letter, basically saying they have a line of credit with the bank. That line of credit's for X. It's going to be used in combination with their earnest money deposit to buy this home. That's the security, right? And so we wanted to secure the transaction with that line of credit, and that's essentially what we're doing. Now, the goal is not to use that line of credit. The goal is we're closing with a traditional mortgage. So the buyer has the line of credit. It's like a plan B, right? But plan A is we're going down the path of a regular mortgage. They've already been approved for the regular mortgage. We just need to get the appraisal, and then we'll mosey on our way with the regular mortgage, and the buyer will close. As we found with the cash guarantee, knock on wood, never having to buy a home, those transactions close. We're fully confident that with the Cash+Secured, those transactions are going to close. And we've added an extra layers because, one of the common questions we got with our Cash Plus program was, what happens if the borrower loses the job, right? Borrower loses their job. We are able to, one, can we restructure the loan in any way, right? Can we still restructure a loan and close with a traditional mortgage? Oftentimes there's two borrowers on the loan, we take one off, they still qualify, we close. The other option is we have this line of credit. That line of credit, if the borrower loses their job, it's already in existence. Nobody's taking that line of credit away. They close with that line of credit, and then we figure, they can refinance out of it once they secure new employment, et cetera, and we can move on. But ultimately, the seller is getting their money, right? The deal is closing because the buyer has that line of credit in place of the residential traditional mortgage. They have the line of credit. Deal closes, everybody moves on, right? So now you're going to ask me.
Yeah, so Joe, I'm the realtor, so let's back up a minute.
Yeah.
Okay. So, and you know, going back to your point around GR being the number one purchase money lender. First of all, I want to, for the realtors that are watching this, listening to this, we want to thank them for their support, the business, et cetera. Because even though we're a bank, I think it's important, and we talk about this a lot, that probably over 90% of the transactions that we close each year are a result of a referral from a realtor. So we appreciate that. We respect those relationships. We need them. And so that being said, I'm a realtor, I'm a listing agent, I'm evaluating offers that have come in. Simply tell me as briefly as you can, Joe, why GRB can safely and securely tell that listing agent that this transaction will close regardless.
So again, the line of credit is the security. The line of credit has advancement terms within it, right? And so when the buyer, before they even submit their offer, they're agreeing to these terms of this line of credit that say, as long as the seller fulfills their obligations as outlined in the purchase contract. So that always happens. Every time we close a mortgage transaction, the seller has fulfilled their obligations under the purchase contract. So as long as the seller fulfills their obligations under that purchase contract, the buyer agrees that the funds of the line of credit will be advanced to the seller at closing. If that buyer loses their job, the line of credit's there, it gets advanced to the seller, they close. If the buyer says, I don't want the house anymore, I don't like the paint color, they can't change their mind. That line of credit is going to get advanced to the seller. The transaction is going to close. And then we will work with the buyer through normal proceedings to they can either remarket the property and resell it, or they can sign the property over to the bank at that point. Either way, the transaction has closed, and now we're working with the buyer behind the scenes to dispose of the property.
That's great. So really the protections are in place. And I think when you look at back to how we work with the buyer up front to ensure that their interest is protected, they've been vetted, they're making a very large deposit that they know that transaction is going to close. They're not going to be surprised on the back end. The seller has the certainty of knowing that transaction is going to close as well.
Right. And again, somebody may question, well, what are the seller's responsibilities? Really, it's just whatever the contract outlines, right? Deliver the property in broom swept condition, right? So again, if any transaction, if you went to a walkthrough, it happens all the time, and there's water in the basement, guess what happens? That deal doesn't close until that situation gets rectified, and this is the same, right? The contract, there's a contract in place. Everybody has to uphold their end of the contract, right? And so I think that's an important thing, that there's almost a false sense of security sometimes with the cash guarantee, because people think that no matter what, somebody's going to step in and buy the house. But again, there's always a contract involved, right? Somebody's assuming the rights to that contract to step in and purchase the home. So everybody always has to fulfill their ends of the contract in order for the transaction to close, and this is no different, right? And again, we've secured the transaction with that line of credit because the advancement terms in that line of credit, which the borrower already agreed to, state if the seller fulfills their obligations, the line of credit's going to get advanced. And then that's the key part that kind of provides that same assurance to the seller as any of these other cash guarantee programs out there, is that they're going to get their money and the transaction is going to close.
So, Joe, to put a bow on this, I know you've been working very hard to get this program rolled out. It's really been, about 45 days or so that you've been working on this to work through the process, the steps, the documents. So all that being said, when can the real estate community at large, expect to probably start to see this program being rolled out?
After watching this podcast.
Okay.
We're putting the final touches on it now. We should have it out within the next week or two, but it will be after this podcast airs, because the podcast will be part of that launch.
Yeah.
We're excited about it. We think that it's a financial instrument, right? So it's not anybody's word. Right? It's not anybody. It's a financial instrument that has specific terms in there that are legally binding, that require that transaction to close.
Yeah. And I tell you, my suggestion to the realtors that are listening to this or watching this is, what GRB has done with the rollout of this program is that we are certainly rolling out this program so that our buyers can compete in the most competitive environments. We have seen throughout the years many buyers going 0 for 8, 0 for 9, just having a difficult time getting their offer accepted. But I think the other thing that I don't want people to lose sight of is that GRB has the resources set aside to underwrite really any buyer that they're working with, because going back to where we started with this level up process is buyers that aren't in a position to make the 20% EMD. We work with those folks that are putting 3% down. I think it's important for people to realize that we don't just want to cater to people that can put a 20% deposit down. That's great. We want to help them. We want to continue to help first-time home buyers and get those folks pre-approved as well, so that when they're making an offer on a home, that they're increasing the chances of them getting their offer accepted as well.
Yeah, and I think that's a key point, right? We think about somebody getting a pre-approval. Your mortgage financing is taken care of before you even write the offer. Now, your offer gets accepted, biting your fingernails, worrying about, am I going to get approved for the mortgage? Because it's already done.
Right.
And so that takes so much stress off the process for the buyer. And we see that. The transaction goes through so much quicker and smoother because all the hard work was done up front. And now they're able to focus on packing and getting their kids registered in the new school district and whatever, all the things that come along with moving that we take for granted because we do this day in and day out. Somebody doing it for their first time, it's overwhelming, right? And so to have the financing piece just taken off the table and say, you're good. Now don't go buy any furniture, but you're good.
Right.
And that's important. And I think that trajectory for a buyer, whether you are, prefer working with GRB, you don't prefer working with GRB, give your buyers the option to put themselves in a position to win. And I think that's the part that I think is for everybody benefits from that.
Right.
The agents, the sellers, the buyers, everybody benefits from that, right? Put your buyers in that position to win. And, if they have the funds and they can go with and secure the transaction with the Cash+Secured, great. If they don't, let's put them in the best position possible.
That's great. Well, Joe, I'm excited to embark on this roadshow with you. I know that we've talked about getting out there, and obviously, one of the things that we know that we need to do is we have to market this program. We have to educate our referral partners on what this program is all about. And so we're going to be very visible. We hope that you will allow us into your office meetings to come in and talk about the program, educate your agents on how this program works. Because when you're evaluating offers, when they come in and you see the GRB Cash+Secured program, we want them to feel incredibly confident in that transaction.
And not only that program, right? Any of the other programs we mentioned,
Correct.
Right? The pre-approval, the Cash+. Those are all very strong options. And I think, the secured is obviously the strongest of them all. But the Cash+, like I said, over 1,500 transactions and they all have closed. I don't know how much more evidence, how much more proof that we would need to provide to show hey, Cash+ is just as good.
Yeah. So I'm just going to pivot for a minute. We've been talking about how we're the number one purchase money lender in the whole state, which is amazing.
Community bank.
Community bank. Okay. We are the number one purchase money community bank in New York State. Other thing, and I'm pretty confident in saying this, I've said this a lot, that we're not the biggest bank in New York, but I've said that we are the coolest bank in New York because I think we're also the only community bank of this caliber that also has a band. So for those of you that want to get any of, we do have some DVDs, we have merch for Refer with Caution. We'll be more than happy to bring that around as well.
Yeah, they'll be playing the United Way event again
Exactly.
in September.
Yep.
Right, so you can come out and see
Battle
them.
the Bands.
Battle the Bands was a great event last year, raised a ton of money.
Exactly.
And come see Refer with Caution, check them
Exactly.
out. And
So Joe, here we are. Obviously, a lot of things have evolved. So we're excited to launch the Cash+Secured program. Can you share with the folks that are listening or watching, what is it and how does it work and how is it different from the cash guarantee?
Yeah, so Cash+Secured is a program in which we are securing the transaction with a line of credit that's in place at the time when the buyer writes their offer. That line of credit has advancement terms that the buyer's already agreed to that basically say that as long as the seller fulfills their obligations, we will advance that line of credit to the seller. And it is different from the cash guarantees because we have a financial instrument already in place. That line of credit's there. If the buyer loses their job, the buyer changes their minds, those advancement terms require us to advance that money to the seller if they fulfill their obligations.
So simply stated, in lieu of us buying the house in the event that the buyer cannot move forward, we are simply advancing the funds
From the buyer's line of
from the
credit.
buyer's line of credit to the seller, thus closing the transaction.
Correct.
Okay.
So with the Cash+Secured program, we're basically giving the buyer two options up front. Option A, we're able to close with your traditional mortgage. Option B, we have this line of credit already in place, right? So it's not a backup plan per se, it's a second plan that we've already talked about. In that program, we will basically, if something happens, right, people wonder why do you need this backup plan, right? What could happen? Well, there's a lot of things that happen over a 60-day period, 45 to 60 days in which a transaction's closing. The buyer could go out and buy a new car and all of a sudden they no longer qualify. That's a problem. Line of credit is already in place. We close using that line of credit. The buyer could go out and lose their job, right? It happens. It's happened before. If we can't figure out a way to make the deal work traditionally using option A, we got option B already in place. The transaction will close. If the buyer says, yeah, you know what, I don't like the pink color, I don't want to buy the house anymore, well, we got option B in which the advancement terms advance that money to the seller and they get their money, the transaction closes. And so we've really tried to provide that level of coverage, traditional financing coverage through this program to give the seller the assurances that the transaction will close.
Okay, Joe, going back to what we were started. So I'm a realtor. Why is this important to me?
Yeah, I mean, as we've talked about, right, all the different levels of tools that we've provided from a standard pre-qualification all the way up to the Cash+Secured. The Cash+Secured is the strongest and will help you to secure your transaction. So if you're a realtor that wants to secure those transactions, this program is the one that's going to help you do that.
Okay, so that program is going to be the most competitive program for your buyer.
Correct.
Okay.
The Cash+Secured program is there in place to really give the buyers the confidence because we've already underwritten their loan and they have the credit line in place. We're giving the sellers confidence because that credit line has those advancement terms pre-agreed upon that they're going to get their money regardless of what happens throughout the process. So it gives them the confidence in that. And it's coming from a credible source. And we're a $1.2 billion bank, right? We have the financial wherewithal. The financial instrument is in place to advance those funds to the seller should something arise. If you use Cash+Secured mortgage, your transaction will close. So, when we think about this from an evolution perspective, we started with Cash+. That program was great. We've closed over 1,500 of those transactions. Again, fully underwritten. Those deals have all closed. We rolled out or upgraded your program to the Cash Plus Guarantee. Those transactions, all closed. Now we've pivoted it and strengthened it a little bit more, giving the buyer more confidence because that line of credit's in place with Cash+Secured. And that Cash+Secured now secures the transaction for all parties.
So Joe, how can someone, learn more about this program and briefly walk through the steps?
Yeah, so, to get approved for Cash+Secured, step one is we approve you for Cash+. Because you're thinking about buying a home, but you may not know exactly which home yet. So we get you approved for Cash+, we get you in the system. And then when you're ready to write, we can level that offer up with Cash+Secured and secure the transaction using that line of credit. So step one is going to be getting approved for the Cash+ mortgage, right? From that point, our loan officers will work with you when you're ready to write on the house. right? We're going to understand
So when you're ready to make an offer.
when you're ready to make an offer, we're going to work closely with you to, one, figure out what that appraised value is going to look like. And then two, once we've done that, we can then level up that offer to the Cash+Secured and secure it with the line of credit.
So what will the buyer and or the seller receive once that offer is being presented?
Once that offer is presented, or at the time of the offer is being presented, there will be a proof of funds letter.
Okay.
That basically says the buyer has a line of credit with GRB for the purchase of 123 Main Street. That line of credit's in place and ready to go and provide the assurances to the seller that that transaction is going to close.
Great.
So as a result, once all that's done, the buyer and the seller all have the assurances that the transaction is going to close because we've secured it with that line of credit. This financial instrument is in place to ensure the transaction is going to close.